class, Bitcoin. So Bitcoin, do you think, or what's your sort of vision for Bitcoin? Is it going to become a reserve currency? Is it scarcity value like real estate? It started the purview of every college student, including my own, knew about Bitcoin before their parents did. So what's your kind of vision going at 5 years and 10 years for Bitcoin as an asset class and a value?
We don't have to go out 5 or 10 years. It's here. We believe, we wrote a white paper in 2016 called Bitcoin Ringing the Bell for a New Asset Class. And so, yes, we believe it's here. We believe that Bitcoin is the reserve currency of the crypto asset ecosystem. Mm-hmm. We also believe that there will be very few huge winners in the crypto space. We think the cryptocurrencies are going to be the huge winners. So this is really flipping the internet on its head in terms of how it evolved. And the internet evolved without a payments infrastructure. And the reason for that is nobody thought commerce would evolve on it. This was for intelligence and academia, and consumers in the United States weren't even allowed to use the internet legally until 1991, Telecommunications Act. So we believe that the Bitcoin is, and crypto world, the value accrual, where we will see most of the value accrue is to the cryptocurrencies themselves. This is not what happened in the internet. In the internet, the protocols, so Bitcoin's blockchain is one protocol, Ethereum another, the protocols basically just became standards, right? Technology standards upon which these very valuable applications were built, Facebook, Amazon, and so forth. The value accrued to the applications. This time, we think the value will accrue to the protocols themselves and the currencies as measured by their currencies. Mm-hmm. We believe that Bitcoin is already the reserve currency of the crypto asset ecosystem. And we can see that in that many crypto assets, most I would say, are priced in terms of Bitcoin. So that's the unit of account. The currencies are very important. We think there will be maybe 4 or 5 that are going to accrue the most value. Now, DeFi, watching it evolve, I mean, we're in the Wild West, decentralized finance. It's very exciting. So that's probably why Ether is going to be another one. We do have a fund right now only with 2 currencies in it. This is a private fund, and that's Bitcoin and Ether. But we're scouring the scene. Some of the custody arrangements associated with others like Decred aren't quite there yet. So, again, we're picking our spots carefully. And so, yes, we think it's an asset class. We think Bitcoin itself will, I was quoted in some paper, I never said this, but someone did some homework and added what I was saying up and said, ARK thinks this is a $10 trillion opportunity when it came to Bitcoin. And I said, I never said that, but I did actually say it with the building blocks. We think institutional could institutional going to say 5 or 6% of institutional portfolios, again, very low correlation. And that's sort of where real estate and emerging markets went. That would add $500,000 to Bitcoin's price. So right there, that's nearly a tenfold increase. If you look at playing the role of cash on the balance sheet, which is, we did not incorporate this into our institutional white paper because we didn't expect it, to be honest. But now we see Square and Tesla and MicroStrategy. They have diversified some. In the case of Square and Tesla, it's 5% and 8% respectively. MicroStrategy, it's 100% of their cash in Bitcoin. So if you were to expect 1%, if corporations did that, I think this is just a US calculation too, that would be a 40,000 increase in Bitcoin. If it's 10%, closer to where Tesla is, that would be a $400,000 increase in the price. So again, another 8-fold increase. So, and those are just 2 use cases. I mean, the biggest use case is an insurance policy for anyone in the world, to protect against confiscation of wealth. And part of that, it could be inflation with unhinged monetary policies. I think that's much more of a risk in emerging markets. And so I think we'll see a lot of insurance policies being taken out in the form of Bitcoin. I often reflect that the Saudi princes probably wished that they had allocated some of their wealth to Bitcoin, because they certainly didn't expect their own cousin to confiscate it. But that happens all over the world in ways that we don't even understand. And so I think that insurance policy could be the biggest use case.
So it would be replacing gold. Plus, there's no carrying and holding cost.
Exactly.
Which is a huge win. So to pivoting north, very far north, you've recently launched a space ETF. Mm-hmm. So I'm a Star Wars fan from way back. Tell us more about space and the opportunity, and how are you going to invest in it?
Right. And it's a very exciting opportunity. The reason, again, I'll go back to the technologies are ready and the costs have come down low enough. SpaceX has been a game changer here. Reusable rockets. I think Elon was doing it so that he could get to Mars. But from our point of view as innovation investors, the declining costs by reusing a rocket, I think the Falcon 9 is up to 9 times, if I'm not mistaken. Mm-hmm. Think about the drop in costs that represents. The costs of satellite technology are coming down dramatically as well. The cost to launch a rocket coming down. Antenna, probably the biggest gating factor. Those costs haven't come down as much as we like, but they are coming down, and will come down faster the more these satellites are launched. So these are all volume-driven cost declines, right? And something I'd like to explain here is Wright's law. Wright's law is a relative of Moore's law. Moore's law is a function of time. Wright's law, a function of units. Mm-hmm. And Wright's law says, Theodore Wright, from the early days of airplane manufacturing, observed that for every cumulative doubling in the number of airplanes produced, costs declined at back then a 10% rate. The technologies that we're seeing today, though, that number, that for every cumulative doubling, what's the cost decline in DNA sequencing? It's 40%, right? Think about that. And we can even decipher between short read sequencing, that's 40%, long read sequencing is 25%. Industrial robots, collaborative robots, that's 28%. Artificial intelligence costs are dropping 37%. The cost to train in using artificial intelligence, those costs are dropping 37% per year. That's not even a cumulative doubling calculation. So it helps you understand why these technologies are going to take off so quickly. They're going to unleash waves of demand, the more and more costs decline. Space is the convergence of many of the 14 technologies involved in our 5 platforms. So certainly robots, energy storage, 3D printing, huge use case. Aerospace is the killer app for 3D printing. Artificial intelligence. In order to get those 2 rockets to be reusable and to land at the same time without blowing up, that was an artificial intelligence exercise. And if you have watched what happened, failed every time. And then there was a success. The machine had trained itself. Success. I think they've had only one failure recently. Yeah. So all of these technologies are coming together. Now, I think when people look at our portfolios, they're kind of disappointed, actually, because they're not seeing space exploration or Mars or what have you. They're seeing more mundane companies to some extent, some very exciting ones in another sense. But we think the 2 biggest use cases near term and within the next 5 years are going to be mobile connectivity. So the 3 billion people who are effectively in the dark, meaning no broadband, they will get broadband. And so that's an important use case. It's worth $40 billion per year, we believe, in revenues. And 10 billion of those are going to be in the US, believe it or not, because 40 million people in the United States, more than 10% of our population, have no broadband.